Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 18th of July in London. I'm Caroline Hepker. Coming up today, Fed Governor Chris Waller breaks with fellow policymakers as he backs a rate cut at the next meeting to support the US jobs market. Traders place wagers on more Bank of England reductions this year that could net them a 1,000% return. Plus, diplomatic speed dating. Nations use the G-20 gathering in South Africa to forge new alliances as they face a US pullback. Let's start with a roundup of our top stories. Fed Governor Christopher Waller is backing a rate cut this month to support a labour market that he says is showing signs of weakness. His remarks set him apart from most of his fellow policymakers who have characterised the employment landscape in the US as still being solid. But Waller argues that inflation expectations remain anchored and wage growth isn't accelerating.
I believe it makes sense to cut the FOMC's policy rate by 25 basis points 2 weeks from now. And looking to later this year, if, as I expect, underlying inflation remains in check, with headline inflation data reporting modest but temporary increases from tariffs that are not unanchoring inflation expectations, and the economy continues to grow slowly, I would support even further 25 basis point cuts to move policy towards neutral.
In a question and answer session after his speech at an event hosted by the money marketeers, Waller said that the timing of additional Fed rate cuts, beyond the one that he's pushing for, would depend on incoming data. Speaking separately to Bloomberg, San Francisco Fed President Mary Daly says that she thinks it's reasonable to plan on 2 interest rate cuts this year.
Can't wait forever, because if we wait till inflation gets to 2%, well, then we've lost. We've likely injured the economy in some way that was completely unnecessary. And so I'm of the mind that, the summary of economic projections we put out, which had 2 rate cuts for this year, I think that's a reasonable outlook to have.
Mary Daly, however, did not commit to an immediate cut. The latest commentary from policymakers comes as the S&P 500 closed at an all-time high on Thursday, briefly topping 6,300. Now, the latest news on rate cuts comes as Fed Chair Jerome Powell responded to concerns over the $2.5 billion renovation to Federal Reserve buildings in Washington. The criticism over the construction has coincided with President Trump's increasing hostility towards the Fed chair as the president lobbies for lower interest rates. In a letter to the White House's Office of Management and Budget, Powell now says that the Fed has added a web page for transparency about the renovations. With more, here's our international economics and policy correspondent, Mike McKee.
Powell says that they're misunderstood, that the Fed has been regularly monitoring the costs. They've gone up by circumstances outside of their control, plus the fact that they're renovating 2 buildings from the 1930s that have never been renovated. They have to do things like asbestos removal and shore up the building on the inside so they don't collapse.
Bloomberg's Mike McKee speaking there. Jerome Powell also says that he has now asked the US Inspector General to conduct a fresh review of the project. Now, some traders have placed contrarian bets that the Bank of England will cut interest rates in the UK by 75 basis points this year, with a possible return for them of 1,000% on the line. The wagers were made yesterday, despite the market moving in the opposite direction after a hotter than expected inflation print. Bloomberg's James Wilcock has the story.
This gamble rests on the labour market. Although this week saw UK inflation rising to 3.6%, yesterday's jobs data saw the number of employees on payroll drop and vacancies fall for the 36th consecutive month. So although options trading is anonymous, the thinking behind the £1.5 million in bets is likely the Bank of England will have to address Britain's cooling labour market. It's made even riskier by the ONS jobs data being subject to frequent, sometimes quite drastic revisions. In London, James Wilcock, Bloomberg Radio.
Staying with the UK, it has emerged that details of more than 100 Britons, including spies and special forces, were in a data leak of Afghan collaborators. Almost 19,000 people had their information compromised in 2022. Courts had blocked journalists from reporting the news as the UK government spent £850 million on a secret relocation programme for thousands of Afghans at risk of retaliation from the Taliban. Labour MP and leader of the House of Commons, Lucy Powell, says that the whole situation has been uncomfortable.
There are many, many questions here about how this data leak happened, what were the consequences of it, what actions were taken as a result, and what procedures and policies have been put in place to make sure that that would never happen again.
Lucy Powell and other members of the government are facing calls for a public inquiry. The Shadow Defence Secretary, James Cartledge, apologised on behalf of the former Conservative government, which was in power when that leak was discovered. The US Commerce Department will impose anti-dumping tariffs of 93.5% on imports of Chinese graphite, which is a key battery component. The new duties will be a blow to battery manufacturers as they add to existing rates, making the effective tariff 160%. Tesla and its key battery supplier, Japan's Panasonic, were among companies pushing to block the new tariffs. The new charges are set to make the global electric vehicle supply chain even trickier. And in earnings, Netflix has reported second quarter results that exceeded expectations in every major metric. Revenue at the firm grew to $11.1 billion over the period, with earnings jumping to $7.19 per share. CEO Ted Sarandos says his outlook is positive.
We're feeling really good about the business. We had a plan to re-accelerate growth, and we've delivered on that plan. And engagement, which we view as our best proxy for member happiness, because when people watch more, they stick around longer. So that's retention.
Netflix's Ted Sarandos speaking there. Now, the final season of Squid Game was one of a steady slate of popular shows that Netflix released. The company has also raised its forecast for full-year sales and profit margins. It expects to generate up to $45.2 billion in sales this year. And lastly, in sports news, England are through to the semi-finals of the Women's European Football Championship after beating Sweden on penalties. The defending champions overturned a 2-0 deficit with an equaliser from 19-year-old Michelle Adjemang in the 81st minute, taking the match to extra time. Manager Serena Wiegmann said that the side's 3-2 spot kick victory was eventful.
Still very emotional. I think a lot of adrenaline still in my life, in my body, I mean. But, yeah, crazy game.
England coach Serena Wiegmann speaking there. The Lionesses will now face Italy in the semi-finals next Tuesday. And if you're hanging in there for the golf, Matt Fitzpatrick is hoping to build on his promising start at the Open Championship. He goes into the second round at Royal Portrush with a share of the lead on 4 under par. And those are our top stories for you this morning. Let's have a look at the markets then. So in Asia, you've got the MSCI Asia Pacific Index up by 0.3%. The TAIEX jumped higher, almost 1%. The Hang Seng Tech Index also gaining, thanks in part to TSMC's upbeat guidance, lifting semiconductors in Asia. US and European stock futures firmly in the green. The S&P 500 closing at an all-time high yesterday. We had solid US retail sales yesterday. The dollar is lower. Treasury's catching a bid after those comments from Waller about an interest rate cut, the upcoming meeting. And we have a sales update that we're watching out for from Burberry. So those are the markets. In a moment, we'll bring you the latest on the shifting sands around the outlook now for US interest rates, plus why the G-20 in South Africa has become a chance for a bit of diplomatic speed dating. Before that, though, another story's caught my attention today. AI agents are about to go mainstream. Now, this is the artificial intelligence software that can complete multi-step tasks for users with quite minimal supervision. OpenAI is going to roll out these new ChatGPT options that basically do more than just research. They browse, type and click on the internet for you so they can streamline your sort of personal and professional life. It does mean you have to pay for them if you use ChatGPT Pro, Plus and Team. This, according to Bloomberg's Rachel Metz, who's been writing about this. Microsoft and rival Anthropic are also focusing on this AI agents. It's the next step in AI. Sam Altman has in the past called it the next giant breakthrough. I was pretty dubious about getting sucked into another kind of time-consuming internet world, maybe akin to social media. But actually, I've started to see some productivity gains from AI. So I wonder exactly what the capabilities of AI agents are really going to be. We're going to find out pretty soon. There are also some warnings, though, about safety and security risks that could increase with them. You do still have to give them, apparently, permission to make any purchases if they do get to that point for you. But it's a really interesting piece that Rachel's written about exactly when you'll get your hands on these AI agents. I'm going to put a note and a link to that story in our show notes for you. Now, let's think about the Federal Reserve. Christopher Waller saying that policymakers should cut interest rates by 25 basis points this month to support the US labour market. Joining me now is our Markets Live strategist, Mark Cranfield, on this story. Good morning, Mark. So the next Fed meeting is the 29th to the 30th of July in Washington. What data is Waller pointing to support a rate cut?
He favours the labour market, saying that it's not quite as strong as it seems to be on the surface, that there's underlying issues there, and that wages growth is helping to keep inflation down as well. So he sees that as being a bigger risk than some of his colleagues do. So that's he's very focused on that part of it. It's yet another signal to investors that there's quite a split within the Fed thinking at the moment. He's not the only one who thinks there should be early interest rate cuts. Mary Daly also says the Fed shouldn't wait too long. But then, of course, we've also heard some people this week saying that patience is the best way to go, and they're not ready. So should be a pretty lively meeting behind closed doors in later in the month.
Although, are we getting to the point where we have to ask about whether policymakers' comments are entirely focused on the economics? Remember, only yesterday, President Trump speculating about firing Jerome Powell. Powell's had to defend the Fed's spending on renovations, and he's still under pressure. How do markets see that?
I think markets traders have been thinking that way for a few weeks already. I think if they weren't concerned that there was some politicking going on and that Jerome Powell was under extreme pressure from outside sources, you wouldn't have the betting markets giving any odds at all on Jerome Powell leaving before the end of his term. As it is, I think at one stage this week we had 40% odds that Jerome Powell would not finish his term, which seems quite incredible when you think that he is the chairman of the Federal Reserve. So the fact that traders are even willing to make bets on the fact that we may have a different Fed chairman, that's really just shows how seriously they're having to take that. It's also being reflected in the value of the US dollar and the shape of the US yield curve. Those are also things which move in relation to that. I get the sense that traders don't want to go all out on it yet. It still feels like a remote risk, but it is no longer something which they can't pay any attention to at all. They are giving it some credence.
Okay. Mark, thank you so much for being with us this morning. Our Markets Live strategist, Mark Cranfield. So some food for thought there on the Fed. Now let's think about South Africa. The finance minister, Enoch Godongwana, has told Bloomberg that the group of 20 finance ministers and central governors who are meeting near Durban in South Africa are close to a deal on a communique. Of course, the US Treasury Secretary Scott Bessent has not been at that gathering, and the US tariff war has overshadowed it. Joining us now from the G20 event in South Africa is our Europe correspondent, Oliver Crook. Ollie, good morning. President Trump's trade and tariff policies have been sending shockwaves through the global economy. So just firstly, what's the mood in South Africa?
Yeah, not just the trade policy, because, there's been the whole debate about the Fed chair potentially being removed early. And there was this press conference that was given by Donald Trump just about 2 nights ago, actually just minutes before I was going to sit down with the Norwegian finance minister. And I had the sort of the Norwegian kroner up, and that moved by a full percentage point, right, in the wake of all of these sort of conversations. So it really sort of highlights this idea that the Trump administration, with its trade war, but also its sort of domestic policy and politics within the United States on the Fed chair, are really having really large impacts across the world. The old adage about the dollar is our currency, your problem, very much holding the case. And it does cause some concerns about global financial stability, which is exactly what I've been hearing with a number of the finance ministers that I've been speaking to over the last couple of days. We should also say there's been sort of some interesting developments here on the side of the EU. A lot of the sort of big EU countries have also had a meeting yesterday with Canada, South Korea, and Japan, all talking about tariff policy. And this is sort of going into some of the reporting that we have been doing on the concept that maybe if the United States continues to cause massive problems on trade around the world, that the negotiations, that there could be a more formal alignment between not just the European Union and European countries, but potentially broader to something closer to the sort of G6 and that sort of coalition. And I spoke to one European finance minister who really does not believe that whatever we get in the next 2 weeks, whether it's 30% tariffs on the EU or continued negotiations or a deal, that will be the end of the conversation, that those sort of larger coalitions need to be formalized in a certain way, potentially to deal with the United States well into the future.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.